Hello, everybody, and welcome to today's Dynamics 365 Tech Talk. Today's topic is Tax Calculation Service in Dynamics 365 Finance and Dynamics 365 Supply Chain Management. My name is David, and I'll be your moderator today. We are broadcasting this session through Teams live events, and the audio can be heard through your device speakers. This session is being recorded on behalf of the Microsoft Corporation. When you join this event, your name, email address, and/or phone number may be viewable by other session participants in the attendee list. By joining, you're agreeing to this experience. The recording will be available on the TechTalk's Community Dynamics page within 5 business days. If you have questions for the presenters or need support, please use the Q&A panel located on the right side of your screen. Our presenters will be responding to your questions at the end of today's session. Thank you for your patience during these announcements. Presenting for us today from Microsoft, we have Eric Wang, Senior PM Lead, Zheng, Principal Engineering Manager, Severin Bock, R&D Solution Architect, Veselina Eneva, Senior R&D Solution Architect, Edhi, Senior R&D Solution Architect, Benjamin Yao, Principal Group Manager, Maple Nan, Senior Software Engineering Lead, Ekaterina Podkolzina, Senior Program Manager, and Liang, Senior Program Manager. Eric, over to you.
Thank you, David. Okay, hello everyone. Welcome to this session. Here is the agenda for today. So first of all, we will have an overview of tax calculation service, what it is, and what kind of value it can bring to your business. Second, we will have a technical architecture overview to help you understand how it works. Then followed with 2 demos for the real business scenario. And the last but not least, we'll introduce how to build extension in tax calculation service if you have specific business needs. Okay, then let's go to the overview. So tax calculation service is a standalone microservice built on top of Microsoft Azure platform, and the tax calculation service focuses on the tax determination and the calculation part of the full life cycle of tax management. So with this technical architecture, a microservice-based feature, tax calculation service can be available for multiple applications, not like the existing tax engine in FO. Tax calculation service for work for Microsoft first-party and third-party applications. And at the GA stage, we will make tax calculation service available for Dynamics 365 Finance and Dynamics 365 Supply Chain Management. And it's on our roadmap to make tax calculation service available for more and more applications. And the business value tax calculation service can bring to you is like following. So first, it fully automate and standardize your tax determination process across countries and regions. We have a very powerful engine to determine the correct tax rate for your transactions. We introduce this capability later. So with this enhanced determination mechanism and capability, your sales order, purchase order, and other transactions, all the tax rate determination will be fully automated. Second, we introduce a very configurable platform for you to design your tax calculation behavior. You can understand it as low-code or even no-code experience. You don't need professional developers to build extension for you if you have different tax calculation behavior. You can just configure your formulas and conditions in our engine for your business needs. So with above 2 business values, it can simplify your compliance maintenance for your local tax regulations finally. And we got some questions how the tax calculation service work with existing tax engines. So the answer is tax calculation service from functional perspective, it's fully backward compatibility with existing tax engine in Dynamics 365 Finance and Operation apps. So how to enable it? You can enable it by your tenant. It's a new feature in your feature management workspace. You can just enable it like other features. And we have 2 further level control here. So you can enable it by legal entity, which means for legal entity A, you can enable tax calculation service. And for legal entity B, you can enable the existing text engine. They can run in parallel. And furthermore, you can enable it by business process. So for example, for a sales process, you can enable text calculation service if you have complex local requirement. And for purchase process, maybe the existing text engine is enough for you. So you can don't turn on text calculation service for existing text engine. So there are 3 levels of controls here. About timeline, text calculation service is under public preview now. You can visit this vanity URL, aka.ms text calculation, to visit more information here. We have the process how to join the public preview in the document here, and you can contact us if you have interest. And we're planning for GA text calculation service in 2021 Wave 2. You can check our release plan for the detailed date when the GA of text calculation service will be announced. Further to mention here, we also have a YAML group. You can search text calculation service preview in YAML group to find our group. We already have very hot discussions there, and we also have some demos in the group. And this preview word will be removed after GA is announced. So after GA, you may need to search text calculation service. So here is the key capabilities we introduce in text calculation service. There are lots of new features in it. In our document, you can find all those features. And here are the 4 key features. So first is the enhanced text determination. As you may know, in current text engine in FL, we use the sales test group and the item sales test group to determine text code and text rate. And the sales test group is come from customer master or vendor master, and the item sales test group is coming from the item master. So this function can already solve lots of customer problem, but it still have limited feature. For example, in Europe, one legal entity, they may have multiple VAT registrations in different countries. So when even they ship goods to the same customer in the same address, if they ship the goods from country A, then the tax rate and the tax code in country A should be applied. If they ship goods from country B, then the tax code and tax rate should be applied inside the country. So this requirement cannot be met in the existing text engine, but within text service, it's very easy. We introduce a new mechanism, text determination matrix here. In this matrix, you can use almost all the available fields on your document, like sales order, purchase order, and the fields here, I mean, for example, your shipment address, ship to, ship from address, country, state, province, city, even zip code. And we also have invoicing address, item category, nature of your counterparty, customer account, vendor account, all this information are available. So you can use these fields as the input of the matrix, and to determine the output of this matrix, for example, sales test group or item sales test group. So with this mechanism, you can build very powerful determination rules here. And we also have some advanced features here, like we call it cascade matrix. So you can use the output of one matrix as the input of the other matrix to further determine more information here. Okay. And the second feature is enhanced text calculation. As I introduced, in current text engine in FL, all the text calculation methods, they are hard-coded in the system. But with this new engine, it's provide a low-code, no-code experience here. You can just write your formula and the conditions here to define how you want to calculate text. One example here is we also have a demo later, text calculation by margin, which means your text base amount is your sales amount minus your cost amount. This kind of behavior is not supported in the FL system now, as you know. But with the text calculation service, you just define formula here. This is my base amount, and this is my formula, and that's all. There's no coding required here. And the third key feature is multiple text registration numbers. This one is the top one voted idea and the text category in idea portal. You may know we already have over, I think, 150 votes there. So this idea and this feature is available in text calculation service. So first, we enable to maintain multiple tax registration numbers under one single party. Party here means your legal entity and your counterparty, like a customer and a vendor. Now you can maintain multiple VAT numbers under those parties. And the second is we have metrics features here as well to automatically determine the correct VAT number for your transaction. So for a sales order, the VAT number of your legal entity and the VAT number of your customer, if your customer has multiple VAT number, they can be determined automatically here. And just for your information, there will be an upcoming Tech Talk on September the 29th for VAT reporting and the multiple tax registration numbers in single legal entity. That Tech Talk will cover the reporting part. So for today's Tech Talk, we will focus on the determination part. And the fourth key feature is tax support on transfer order. So as you know, in current FL, tax is not supported on transfer order, but with tax calculation service, we enable it on transfer order. And you may know in EU, there's regulation to report the tax transaction under one single legal entity, even the transfer order is within legal entity, but across EU member states. So with this feature, we enable tax calculation, tax posting, tax settlement, and all the tax core tax reports for transfer order. Okay, so here is the availability of tax calculation service. First is the Azure geography. We enable, we deploy tax calculation service for these data centers as of now. The majority data centers like North Europe, Western Europe, United States, United Kingdom are already supported. And we are deploying to more and more Azure data centers on the roadmap. So if your customer has any interest in tax calculation service and your data center is not listed here, you can contact Microsoft support to deploy tax calculation service for your data center. Just let us know. And for the use case here, for the following use case are the supported scenarios like transfer price model, limited risk distributor, and EU intra-community supply and acquisition with multiple VAT registrations, EU triangulation transaction, EU VAT on margin, distance selling, and the US original-based and destination-based sales tax. Also, your tax deductibility based on the usage of your goods. The deductibility percentage is different. And for the country-wise, as you know, we already support 43 countries out of the box in Dynamics 365 finance and operation apps. So in 10.021, and these countries will be supported in tax calculation service. Majority are European Union countries and also United States here. And in 10.022, more Asia Pacific countries are supported here. Australia, Bahrain, also Canada, Egypt, these countries. And these countries are planned in our roadmap. We will support it very soon in the coming release. And just to mention, there are 4 countries we don't support in tax calculation service: Brazil, China, India, and Russia, because of the heavy localization there or the infra issue. So they will continue to use the existing tax engine. And for India, we suggest to you to use our global tax engine. And for the transaction we support, in 10.021, we support most of the sales transaction, sales quotation, sales order, packing slip, sales invoice. And we also support most of the purchase transaction, purchase order, product receipt, purchase invoice. And we also support inventory transaction, as I introduced, transfer order, the shipment and the receiving part will be supported. And on our roadmap, we plan to support a free tax invoice, general payment journal in 2021 wave 2, which means October this year to March next year, they will be supported. And on the roadmap, we will also support more transactions: invoice register, invoice approval, invoice pool, project invoice, expense management, and the budget. Just monitor our release plan about the detailed timeline when they will be supported. Okay. Then I will hand over to our engineering lead, Suzhen, to introduce the technical architecture.
Thank you, Eric. So as Eric presented in previous slide, so for our tax calculation service, we are provide a very configurable engine to support tax functions. So for the whole process, we introduced several components here. One is regulatory configuration service. It's on the most right part. So this is the place that user will do in the configurable work. So for the configurable work, we will include configurable how tax will be calculated and how tax will be determined. So the work will be done here. And the second component, it will be our tax service. So our tax service is built upon CAP core service platform. And the third one is Dynamics 365 apps. So this is the existing ones, and we build integration inside this to connect our Dynamics 365 apps with our tax service. So for the data flow perspective, first of all, user will do the configurable work inside the regulatory configuration service. First of all, do create configuration or modify Microsoft existing configuration if customer need to run advanced scenario, need extensions scenario, or else customer can leverage Microsoft delivered configuration directory. And based on that, the second step will create feature inside the regulatory configuration service by utilizing the configuration either from Microsoft or your configuration derived from Microsoft configuration. So for the feature, user will create rate and applicability rules to determine how tax will be calculated and what kind of tax code will be applicable for the transaction. So once this setup been done, data will be pushed to the global repo, and then normally user will move back to the Dynamics 365 apps and doing this setup to connect the feature with a legal entity, as Eric mentioned in previous slide. So we would enable this tax service enablement per legal entity and actually per business process as well. So inside the D365 apps, user will choose which tax feature will be used. Okay, and then once this simple setup been done, the next step will be running normal sales order or purchase order as whatever you've been done for today. And when the tax calculation is requested, it will send the taxable documents to our tax service. And the tax service will perform the calculation based on the feature identifier. It will, of course, communicate with our global repo to get the detail set up and to determine the tax rate and the tax code, for example. So once it's been calculated, it will be returned back the result to D365 apps. So for this slide, as you can see, I put like tax service instance 2 here, but it doesn't mean only 2 instances. So this would mean underneath we will scale as many as you need. For example, during Black Friday in US, when the peak time goes, when we move to this microservice, we can easily to support this peak time and the scale to support higher TPS request. Yeah, that's it. So I would like to hand over to Ekaterina for the first demo.
Yeah, thank you, Suzhen. So prior to switching to the demo that we recorded in advance, so let's look at the details of the scenario of inter-community supply and acquisition with multiple tax registrations. So we have one legal entity located in Belgium, and this legal entity has VAT registrations in Belgium and in France, and it also holds warehouses in both these locations. So the background of this business scenario or business process is that legal entity purchases goods from a French supplier to their warehouse in France, and from EU vendor to their warehouse in France. So thus a French VAT ID should be applied, and the French domestic and French reverse charge should be applied respectively. So then they transfer from French warehouse to Belgian warehouse, and the shipment part should be under French VAT ID and the French exempt tax code, and the receiving part under Belgian VAT ID and the Belgian reverse charge. So, and for the sales side, when they selling to some Belgian customer from the Belgian warehouse, and the Belgian VAT ID and Belgian domestic VAT should be applied to the transactions. And when selling to some EU customer from the Belgian warehouse, the Belgian VAT ID and Belgian exempt tax is applied. So this is high-level description of the scenario. So let's now switch to the demo, which we recorded in advance, and see how this scenario works in system. Please playback. So the DMF legal entity, the Belgium country region set as a primary address. So this legal entity also VAT registered in Belgium and has VAT registration number in Belgium, and it has a VAT registration number in France. Also holds two warehouses, one in Belgium with Belgian address, and one in France with French address. It also reports taxes to Belgian tax authority under Belgian tax registration, and to the French tax authority under French tax registration. So let's switch to tax service setup in the RCS and the regulatory configuration service, our platform for all globalization services, and review the tax feature setup. So here we configure tax codes and tax rates for our country regions. So we have a subset of tax codes for operation in Belgium for domestic, exempt, and reverse charge, and also subset of tax codes for operation in France, so domestic, exempt, and reverse charge. We also create tax groups and item tax groups in this tax service and assign tax codes to these tax groups. So once tax service determines tax group and item tax groups, the tax code will be calculated based on the intersection of tax codes of this tax group and the item tax group. So let's move to the key solution here, the applicability rules, the subset of conditions for the tax group determination, the output parameter of this matrix. So in our scenario, the input parameters will be shipped from ship to country region and country region type, tax direction, and business process. So for instance, when we will be purchasing from our French supplier to the French warehouse, then French domestic group will be applied. Or when we will be purchasing from our EU vendor to French warehouse, then French reverse charge tax group will be applied. When we will be selling to our Belgian customer, the Belgian tax group will be determined, and if we'll be selling from our Belgian warehouse to some customer in EU, then Belgium exempt tax group will be applied. For transferring for transfer order from France to Belgium, for the shipment part, then the tax group with French exempt tax codes will be applied, and for receiving part, the Belgium tax group will be applied. In case when tax tax group applicability rule is not set, then the tax group defaulted from the customer or vendor master data will be applied. The same for item tax group. So if the applicability rule is not set up in tax calculation service, in tax metrics, so then the item tax group, which is default in item tax master in item master data, will be applied. So the input parameters of the matrix, these columns are not fixed; they are configurable, and by clicking Manage Columns, we can pick any of the available fields on the order header or line level of joint master data. For instance, the delivered terms, of customer account, or item type. We can pick them and add to the selected columns if they're essential for tax group determination. So let's switch back to finance and operations, where I recreated purchase orders. But first of all, let me let's see how tax calculation service is enabled. So in tax calculation parameters, we enable tax calculation service. Once it's enabled, we need to pick a feature name that to be configured in RCS. Once it is selected, the system will synchronize settings from RCS to F&O, tax codes and tax groups and item tax groups will be synchronized from RCS back to finance and operations. So we also can pick business processes available for tax calculation. For our purposes, I picked all the available for sales orders, purchase orders, and inventory, meaning transfer orders. So in case the process is not selected, then core tax engine will be used to calculate taxes for this process. So we'll pick all the processes. So let's move to the operations. I pre-created in advance 2 purchase orders, one from our French supplier to the French warehouse. So when we click sales tax, it will call tax service, and it will determine us the French domestic tax code with the percentage and the tax registration number of our legal entity according to the settings we done in tax calculation service tax matrix. The second one is purchasing from our supplier in Germany, so it's intercommunity acquisition. So, and according to our settings, French reverse charge should be applied, and again, tax registration number of our legal entity is determined. So for the transfer order, when we transfer from our warehouse in France to warehouse in Belgium, on the ship tab, there is now available a tax sales tax button. So when clicking on it, you can review the sales tax, which is calculated based on the rules which we created in tax service, so it's French accent, and our legal entity's French registration is determined, and the tax registration of our legal entity as a counterparty tax registration is also determined, because we are moving from our location warehouse located in France to our warehouse located in Belgium. So for receive part, the same. We have sales tax button. On clicking, we can review taxes calculated for the receive part, and in this case it will be a Belgium reverse charge, and the tax registration number of our legal entity in Belgium is determined as a tax registration number, and the tax registration number of the legal entity in France is determined as a counterparty tax registration number. Let's move to the sales order operations. Also pre-created two sales orders. One is for our for German customer, and we supply from our warehouse in Belgium. So it will be Belgium tax exempt and under our Belgium tax registration. And the second one is selling to our Belgian customer. Submit. Our Belgian customer from the Belgian warehouse. So it will be a local supply with domestic Belgian tax code and domestic Belgian tax registration number. So that's it, the demo. Thank you. So the user. Okay, so now I'm handing over to Kai to introduce the next scenario and demo. Yeah, thank you.
Thank you, Ekaterina. So next, I'll demonstrate the enhanced capability of tax calculation service for special tax regions. Like in this case, in an EU member country, for instance, here in France, car dealers can be taxed on the VAT margin when reselling used vehicles. Unlike the general VAT region in which VAT is calculated on the total sales price, VAT on margin calculates VAT on the difference between the sales price and the purchase price. For example, here, the reseller purchased a used car from an individual for 2,000 euro without VAT and resold it at a sales price at a price 3,000 euro, including VAT. The tax base of the VAT charged in this transaction shall be 3,000 euro less 2,000 euro divided by 120%, which equals 833.33 euro. And actual VAT amount shall be 166.67 euro. Now let's switch to the demo and see how this scenario works in the system.
With tax calculation service, we can define the tax code for this case by selecting the tax component by margin. Now save and enter the tax rate for the tax code. You can continue to set up the tax groups and the relevant applicability rules and complete your tax feature here in RCS. Let me go to F&O purchase order. I'll simulate purchasing a used car at 2,000 euros without tax. So let me now confirm the purchase order. Oh, receive post the product receipt and post the invoice for this transaction. So with the invoice posted, we complete the purchase of the 2,000 euro used car. Now let's go to sales order. We resell the car at a sales price 3,000 euros. For the sales, the price has already been marked, including VAT. Now, click on the sales tax. We can see the respective tax code is detected for this transaction, and the tax base and the VAT amount are calculated as expected. This is all for the demo. Thank you.
Okay, next let me hand over to Maple for the next section.
Okay, thank you, Kai. So here, let me just introduce the design of the test integration part with our test service. So here I just take one example like a purchase order. So for the purchase order, some major entry point for purchase tax calculation in purchase order is tax purge, calculate tax, this method. So by default, it is using the embedded test engine, but now we will integrate the test service with the tax purge calc using test integration. This method we call the test service. And inside this method, the test integration facade calculate will be called as the entry point. So that means when you would like to extend with your own transactions, you can call test integration facade calculate this method. This will be the major entry point. So let me introduce a bit about how this method is implemented. So below is the graph about the overall process. So this process will split into different stages. From left to right, I will introduce one by one. So for the first block is setting retrieval. It will retrieve the test parameters from our FNO and into the mechanism that will host the object. So there will be an object called the text document integration document. Will save all the settings into object. Then the next stage about data retrieval. As you know that we have, for the transaction, we have many tables. Like purchase order, there will be purchase table, purchase line, and during the invoice, there will be vendor invoice info line and vendor invoice info table. So there are many transaction tables, but during this calculation stage, we will fetch all the data from these transaction tables and save it into object. And this object will be used later during the calculation. And the next stage will be the calculation. After we have all the data, we will call the test calculation service with this data and fetch the calculation result
And this result will also be saved into an object. So after that, we will check if there is any error which is thrown by the test service. If it is yes, we will just throw exception to the end user or just show warning to the end user based on the setups. And next stage is about VAT handling. And finally, you will see that in test service, we don't handle the currency. So in the integration part, we will do the currency exchange, including transaction currency, accounting currency, reporting currency, and test currency. So this currency, when after the currency exchange, we will also do the rounding for this part. At the final stage is about the data persistency. It will save all the calculation result into the temp tax work trends table, and this table will be used in the view sales tax form, and also the result will be used during the posting. So let me just, in overall, you will see there are different color. And I know that when you want to integrate your own transactions, which two stage you need to focus on is data retrieval and data persistency, system bound. And if you want to integrate with your own calculation engine, the light blue point is which you need to focus. And all the green blocks are very common used for all the other transactions and other services. So let me move to the next page to show you about the major object, which I have mentioned. This object hosts all the transaction data, setups, errors, and also calculation results. This is a major object. Will go through the whole process of the calculation integration. So first, there are three classes. It's called text integration document object, text integration line object, text integration text line object. You will see in this graph, the top one is the document object, and a document can contain about many lines and also contains many charge lines. So for a line, it also can contain many charge lines and contains the text lines. So text line is about the calculation result. Each text line means one text code with text amount. So you will see that the text lines can belong to line charge, can belong to line. Also, it can belong to the charges. So overall, these are the major objects you were dealing with. So if you want to do more extension on that, let me move to the next slide. There will be some documentation in the docs. So currently we have two pages. One is about to add data fields in the text configuration. Another page is about add data fields in text integration by using the extension. So one is about extend in the configuration, another about extend the logic part in the FNO. So after that, we will also have a new page which is still on the way, where we'll have a step-by-step guideline to tell you how to support a new transaction if you want to do some customization to support a new transaction on your own. Yeah, that's it. And hand back to Eric.
Okay, thank you, Maple. Now it's the Q&A session, so feel free to ask us any questions. We already have some questions here, so let's answer them one by one. The first question is there any cost associated with using the service? So I think this question is about the license, whether this text calculation service requires a separate license and whether it's chargeable. So this information will be disclosed together with the GA announcement and due to the Microsoft policy. And you may know we have a monthly update about the license guidance on our website. So you can monitor our license guidance on a monthly basis to check this information. And the next question is, will cost to the service be subject to any throttling or API limits? So if from technical perspective, there's no limitation. And if this question, I'm not sure if it's from still licensing perspective, then and the same answer, you should monitor our GA announcement and the licensing guidance. And the next question is, will text service also integrate with project accounting? So this one is answered in the slides, right? Project operation module is on the roadmap. So just monitor our release plan for the detailed timeline. Again, as you may know, we release the release plan every 6 months. So you can know what we will deliver 6 months in advance. Next question is, functionality sounds great. Oh, thank you. Especially pulling any data fields on determining textability. It sounds like the user is responsible to manage the underlying rules. Is that correct? Yes, it's correct. Now what we provide is a feature, a platform. So for all the text codes, rates, and determination rules should be maintained by users themselves. And the next question is, do you envision an app store like a plugin? I assume this question is about whether we allow our partners or ISVs to build Edhi on top of text calculation service. So the short answer, yes, this is on our roadmap. We will disclose more when it's ready because it's a very complex feature. So in the end, we will allow our ISVs and partners to publish their own text feature as Ekaterina just showed. So you can build your own rates and the rules in the feature and share it with your customers. And so if you are implementing multiple projects, you can share it. You don't need to do it again and again in each project. And the next question is, when text service for project invoice and expense management you released, will this be both for project operation deployment options? And yeah, again, this is on the roadmap, but this is not available at GA stage. We will announce it with the release plan. Next question is, will you provide a standard text setup for the different countries regions supported? So I think this question is similar as the previous one. So for ISVs and partners, in the end, they can publish their text setup, means text rates, determination rules, to share it with customers. And in some other country, I see another question, whether this text calculation service is mainly about EU. I assume this question is about for US, right? These are the two biggest margins for Dynamics 365 applications. So the pain points for text is quite different in these two regions. In EU, as you know, the complexity is about the text regulations, the rules itself. But in US, the complexity is in the tax rates. There are over 10,000 tax jurisdictions in US, and the tax rates are quite different, and it's updated frequently. So it's almost not possible for user to manually monitor and update those rates in US. And there are already some ISV solutions in the market like Avalara, Vertex to provide the out of the box tax rates and determination rules in US market and also for some other markets. So we are aware of this, and this is also on the roadmap. So we will disclose more later what's our solution for US market when it's ready. And the roadmap for post-transaction. So yes, I think this question is about the integration with commerce system. So again, when it's ready, we will publish it in the release plan. Has this designed primarily for you? So I think it's yes, it's the same question. Are there any plan to support Brazil and India in the future? So for India, as of now, we don't have plan. India will still use the global text engine, which we introduced 4 years earlier in 2017. And all the Indian customers using Dynamics 365 apps are using our global text engine in India. So if you have any project in India or legal entity in India, we recommend you to use our global text engine. And for Brazil, as I introduced in the slides, due to the heavy localization there, as of now, we don't have plan to route text calculation service to Brazil. Brazil will still use the existing text engine with all the localization features enabled. Next question is, do the text groups, item text groups, need maintained in RCS and as well as FO? So short answer is no. You only need to maintain it in RCS once. So the ideal model is in the future, if you are interested in text calculation service, maintain all the codes and groups in RCS once. And when you select the text feature in FO in the text calculation parameter, all the text codes and the cell text group item cell text group will be synchronized back to your FO environment and list legal entity automatically. You don't need to do it again. Next question is, will this feature be available for all regions like EU, Asia, and Australia? So I'm not sure the regions here means what. So in my slides, the first definition of region is the Azure geography or Azure data center. So the answer is yes, we plan to deploy text calculation service for all the Azure data centers, the same as FO and scope. And if the region means the legal entity in FO, so I think it's also answered in the slides. Brazil, India, and Russia, China are not supported as of now. For rest of the countries we support in globalization scope, we will support it. Okay. Next question is, will this new feature be supported on-premise? And the answer is no. We only support cloud-based application. Will this text service work with other ISV text service providers like Vertex, Avalara, Solvers? Yes, I think I answer this question is, so first of all, what we provide is a platform and very configurable and flexible features here. And the strength of those ISV solutions is about contents, text rates, determination rules. So we are not competing each other. Actually, we are more like a partnership. So in the US market, we may leverage the same approach, that build a partnership with some local ISVs and to make our feature more attractive in the US market. Next question is whether there is configurable specific exchange rate to set up for text service. So for text service, what we focus is text determination and the calculation. So for the text posting part, now it's already available in the existing text engine in finance and operation apps, right? So I'm assuming you are asking about this part. So for the exchange rate, it will still be in FNO side. For text service, it will calculate text amount only, and it will skip the currency. Next question is, by when this recording will be available? So this recording will be available within 5 business days. Next question is, what do you mean by the planned countries? Is the service will be available for those countries, or the setup will be predefined for them? So what I mean for those countries means the service will be available for those countries, and all the localization feature, text perspective localization feature in those countries will work in text calculation service as well. But for these countries, we have no plan to provide predefined contents as of now. Okay.
Okay, so we have more questions. So for next will be, will there be safeguards in code to fall back to old calculation mechanism in case the service is not available? So basically our service will provide a very strong BCDR scenario, so we can free over. So one of the instances fail, it will be free over to the other one. So we are pretty confident for that. So answer for that is no. So yeah. Next question is, will we get a feature for mass correction of text transactions? Example, people recorded text is wrong and notice that they might need to correct current or posted sales text transactions. Will there be a feature in a new text service that would allow us making such a quick and easy correction? So short answer for this is no, because when text calculator is wrong, it will be impact in a lot of aspects, like your voucher posting could be wrong. So if you only just want to adjust the tax amount itself, it will be the same as today. You can create tax adjustment journal to adjust the amount. But if you want to make everything to be correct, different situation will be different. So it will be working as same as for today in FNO.
Okay, and it seems there's no more question. So I will hand over back to David.
Thank you, Eric. I've posted a link to a short survey in the Q&A panel. We'd like your feedback on today's session and hear what you'd like to see in future events. Thank you for your participation. As a reminder, the recording of today's session will be available on the TechTalk's Community Dynamics page within 5 business days. I'd like to extend a big thank you to all our presenters and audience for joining us today.